Welcome to another episode of the Dental Sherpa podcast.
Hey everyone, this is Caleb Carter. Thank you for being here with us. We will be sharing crucial insights to navigate your dental practice transition successfully. Gear up, clip in, and let's go.
Welcome everybody to another episode of the Dental Sherpa podcast. Today has been an episode that I've been trying to put together with my friend Bill Owens. Bill is a CPA and owner, one of the four owners, right, Bill, of Owens and Bondell?
That's right, yep.
So, Bill, where are you guys located? Maybe just a little bit about yourself for our listeners today and maybe a little background of who you are. And then I'm really excited to dive into some of the changes that this COVID brought for our taxes this year.
So thanks, Caleb, for inviting me to do this. We're located in Phoenix, Arizona. I have three other partners, and we're a small CPA firm that started about 40 years ago out of my dad's house. And he had 13 clients at the time, physicians and dentists, and we've grown over the years. We bought him out about 17 years ago. And today we work with about 420 dental practices, most in Arizona, but some in Utah and Idaho and Montana, Nevada, New Mexico, Texas, a few in other states. Our focus is to work with the single owner doctor that maybe owns one or two locations. Maybe there's two owners. And we've done this by helping with bookkeeping, tax preparation, payroll, and we do advising as well. That kind of comes naturally from our emphasis on the dental clients. So we've maintained membership in a national group, the Academy of Dental CPAs, which is a group of 25 firms across the country that specialize in dental. And between that group, we do a lot of crying on each other's shoulders. We share a lot of it. We share a lot of information. It's good therapy, and it's also great information sharing. We meet twice a year and talk about things and have great connections with national groups that are involved in the dental industry. So I'm married, I have 5 kids, and
No, I didn't know that about you, Bill. I have 5 kids as well.
Yeah.
So we have more in common than what we thought, huh?
21 down to 11. So
Wow.
Wow. Good range.
I bet you this tax season probably is good and bad for you. Probably you're excited to maybe even get a break from 5 kids on occasion to work late into the night for this busy season coming up, but also probably miss that family.
For sure. I definitely, my younger boys have baseball practice. Baseball started up. And so if I get a chance, I'll get a practice and hit a game. That's a good reprieve for me, a good break.
There you go.
Yeah.
So just for all the listeners, I met Bill through a mutual friend, Clint Johnson. We were talking about putting together some seminars, and we got chit-chatting a little bit about kind of all the changes that this last year with COVID has brought in the accounting world. And I just really thought it would be super helpful to get Bill on our podcast today to talk about some of the challenges that this brought and some of the successes that it's brought. And maybe even, Bill, even with your knowledge, I know you're looking at people's income statements and stuff like that through all your clients. Maybe you can share a little bit of impact that you see happen in your scope of practices. That might be some trends that you might want to share about this last year so that people can kind of get a sense of where they sit. That might be a really fun exercise just to say, here's some generalities that we noticed this year out of COVID that might be helpful for other people to see. And then I really want to make sure that we really hone in on what are the specialty things that we need to talk to with our accountants and even if they're not with you, Bill, as a client, like what are the things that you should be asking your CPA? What are the things that you need to make sure that you do this year that you didn't have to do, last year or the years before? And then maybe even just some general advice. We have a lot of listeners on here that are just getting started in their dental practice. And we have a lot of listeners that are like just starting to say, all right, what do I want to do to maybe retire, and maybe some parts and pieces that might work with that to maybe help them make some better choices with their accounting and their tax dollars on those phases of their career. But maybe just very first, Bill, let's just talk about some of the unique things that the dentists and dental owners are going to need to think about this year when filing their tax returns, and what some of these government subsidy programs have changed for them this year.
Okay, that's a great question. That was that was a lot, but I think I don't know, Caleb, if you did this on purpose, but it was almost about a year ago this week when everything started to change. The IRS says, hey, we're gonna change the file, we're gonna change this, things are shutting down. And so this is kind of fun in a way, 1 year anniversary for a lot of these things that all started about a year ago.
I don't want to remember those days, Bill. Those were days filled with very long nights and very, very long conversations with a lot of people that were really worried about the future of their practice. It was a little bit crazy, actually.
It was scary, and we fielded a lot of calls from people that were nervous. And I had a couple clients that called me. This was probably the May timeframe, and thought, I'm not going to make it. How do I start the bankruptcy process? How do I do this? Those two clients made it through, and they're doing better now. And so I guess when I say fun, it's fun to look back to say we made it through this. But to your point, yeah, there's some things that definitely changed that we need to be aware of. So just a brief timeline. In May, the big CARES Act passed, and one of the things that introduced was the PPP loan, and that became immediately a factor for most all of our clients. Some did not do it, but I'd say 95% of our clients were interested and wanted to apply for that payroll protection program loan. We were involved in calculating that amount based on your payroll numbers, 2.5 months of average payroll, plus health insurance, some rent, utilities. Won't go into all the details of that, but
Right.
That money started to drop in May. Most clients got that in early May. At the same time, maybe the state had issued a shutdown order. Now, each state was a little different.
Right.
But as I say this, we'll come back to this in a minute. With some recent changes involving the employee retention credit that has just become clear as of about a week ago.
I'm super excited to talk about that, actually, Bill. I know it sounds kind of geeky, but a lot of people are wondering how the heck this is all going to pan out for what they have to pay back, et cetera, et cetera.
The legislation that's passed, starting with that May bill, as there were a couple others throughout the summer, and then December 27th was kind of the next big drop that basically said, oh, hey, remember when we said you couldn't do the ERC and the PPP? Well, we changed our mind. Now you can do both. So that's why you're excited to talk about that. And obviously, our clients have been hearing and reading things about, oh, I got the PPP money, I used it, it helped me. Can I now apply for this credit, and am I eligible? And how do I determine that? So back in May, the money started to drop, and they initially said it was 8 weeks to spend the money. Then they changed it to 24 weeks. So that usually moved out to about October. So using 60% of that PPP for payroll over 6 months became a no-brainer. So that initial stress and pressure of everything was removed when that happened. Now, with that as a backdrop, how many of your clients actually closed their doors about a year ago, or maybe April might be a better time? And how many actually closed their doors, do you think?
Yeah,
versus getting kind of a modified schedule.
yeah, I guess it all depends on what your definition of modified schedule are. Probably about 50% of my dentist actually said, "Hey, we're only seeing emergencies only, so only if someone calls." So essentially, doctor sitting in his office, someone in the front office, just fielding calls. If people had a toothache and it was an emergency, they would come in. And then we probably the other 50% were running at a very reduced schedule, meaning, they would see some emergencies, but also if they had people in their schedule already that were, if the work wasn't going to be done, would be turned into a problem, root canals, those type of things. They finished those out. But most of them really didn't see much of a hygiene schedule there for most of April and
Yeah.
May.
I probably had less than 5% that just kept on cooking,
Yeah.
but everybody else, those ratios probably sound familiar. I mean, there was a hit, and a lot of those conversations revolved around, should I put my employees on unemployment? Should I fire everyone and go? Because of course, part of that CARES Act was that extra money that came through the state
Right.
for that unemployment. And so that's another key factor as we talked about ERC, because while those employees were laid off or furloughed, whatever word you want to use, if they were not on your payroll, but they were collecting money from the state unemployment office, during those dates, as you calculate this ERC, you have to know what those are, because you can't count any of that. That makes sense, right? They're
So
getting paid with that money through the state. We cannot figure them in our calculations over here in the credit.
So Bill, maybe just real quickly, we use these acronyms ERC. Maybe give just our listeners like a very non-accountant level description of what this ERC is, because my guess is there's some listeners today that haven't heard of this and what it is and how it might help them. So maybe just a quick, small, brief explanation of what it is, so that when we refer to it here for the next couple minutes, they actually know what they need to talk to their accountant about.
Thank you. ERC, Employee Retention Credit. And some people are adding a T in there, Employee Retention Tax Credit. This was developed, like I said, last year for those employers who decided not to lay off their employees and to give them a break. Hey, you kept going, maybe some essential businesses that stayed open, that still paid their employees, that looked at everybody around getting PPP money and said, wait a minute, what about our group? Well, they still had jobs, that was positive, but that tax credit was to help those employers who kept their employees. So the idea is that the nutshell is, when you pay your payroll taxes as an employer, you submit a 941 tax return every quarter that reports, these are the wages I paid, here's my Social Security, Medicare, here's the withholding, and I'm straight with the government. I've paid it. The tax credit is actually claimed on that form. And so this summer, we're going to be amending everybody's 941s to claim that tax credit. We've done some of these already. They could be $5,000, they could be $15,000. It could be a lot of money depending on your wages that you paid to your employees.
And it's a tax credit, right, Bill?
It's a credit.
Not a reduction. I mean, not a write-off, but a credit, meaning that it's dollar for dollar that you don't pay for taxes. Is that accurate?
You got it. It's a credit. It's better than a deduction. So if I have $100,000 in wages, and I do the calculations, and I determine that I have a $5,000 credit coming my way, according to the law, I take my $100,000 wage deduction, change it to $95,000, but then I get a $5,000 credit. So it's always better to take a credit than a deduction. The credit is calculated, and this is very simple. It's up to the first $10,000 of wages, you take 50% of that. So once you calculate your time frame, if I worked for you and you paid me $10,000 over that time frame, your credit would be $5,000.
Wow.
So
So
that's a lot of money.
what time frame does this credit cover?
Well, that's the question of the hour, because
Bill, nothing's ever easy with these dang taxes. Nothing's ever easy, Bill.
this is what's causing us a lot of discussion right now in late nights. Is how do you calculate this thing? Because once you get to the number qualified wages, you kind of can sail through the rest of it, right? It's math in its compliance forms, but the qualified wages is, and I'll try to say this as concise as possible. You take your quarter where your income has gone down by 50% or more, probably the second quarter. Then you take the next quarter, you have to have bounced back by at least 80%. That's your bounce back quarter. For a lot of dentists, it is the third quarter. But if you didn't bounce back the third quarter and you were still struggling, it might be the fourth quarter. Once you determine the quarter of the 50% and the bounce back, you take those 6 months of wages, add them up, subtract your PPP loan, because you can't use your PPP money in the credit calculation. Once you subtract that, then you have to figure out the state shutdown mandate, if that affected you at all. Now, in Arizona, we had a hard shutdown date, and we figured that calculations into it. Other states had that, some did not. But modifying your schedule based on a suggestion does not, we have to do another calculation for that. So take the 6 months, subtract the PPP, figure out the state shutdown, and then make sure the unemployment stuff is out of the picture. That's your wages. That's your qualified wages.
Yeah, that sounds easy, Bill. Sounds like they don't even need an attorney or a CPA to do that, right?
It's I've seen 3 different calculation spreadsheets that guys have come up with.
Yeah.
And sometimes we make things too complicated, Caleb.
Yeah.
And in my world, the other CPAs, and we love to make things too complicated. Well, my job is to make things uncomplicated, because I want to be able to explain that to the client so they know what the heck it is. So I'm in the process of trying to make this as uncomplicated as possible.
So the number one thing that they probably need to talk to them about then is this credit, this tax credit.
I think that's definitely at the top of the list right now in terms of bang for the buck. How to qualify for that credit, and in particular the relationship between that and the PPP loan. If you apply for PPP forgiveness, you've already done it, and your loan is under 150,000, that first PPP loan, this should not be an issue. You have to have the numbers, but if your loan is above 150, that application you submit for forgiveness has some details in it that will affect your credit.
Yes.
So hit pause if you're applying for PPP1 forgiveness and your loan is above 150,000.
Make sure you reach out to someone that can help you there, right? And make sure that you're taking those steps in the right way to get the maximum out of that PPP loan.
Right.
Good.
And it might be okay. Your case could be fine, but and we'd also don't want to go through all this to save you $1,000 and your CPA charges you $1,500 to do this. Right?
That's true. Yep. That's
we don't want to do that.
Very true.
So that's the high level
good
answer to that. But I'd say that's probably near the top of the list, is that ERC. And I'd say behind that is the HHS money that came through. This was free money that came through initially to Medicare providers, and they kept opening the door, right?
Right.
Hey, we still have money, let's give it away. Oh, we still have money, let's give it away. So dentists, maybe December-ish, could have had a large chunk of money deposited in their account that they weren't sure. Well, if they kept that money, you do have the option to turn it in, but if you kept it, they're now, the government's starting to release the protocol for reporting because you have to, that one's got some red tape attached to it where you have to submit financials, backup to make sure you're using that properly, that money properly, that you qualified for it in the first place. So that's another thing.
So I know that there's a couple of my clients that did receive this HHS money and didn't know much about it, right? And we get the phone calls, what do we do? And for the most part, you know, the advice was we don't know much about it. So let's see what happens here, right?
No, I'm with you, and that's what I was saying. So when they handed that out, a lot of them went back to doctors that already had submitted these claims through Medicaid, right? They were already in the system, so to speak. And when they went to give the money out, they just went down the list. Oh, Dr. Jones, he's helped. Okay, let's give him some money. So initially it was 2% of your collections, and you had to substantiate that. Well, the third round in December was a different calculation, and it turned out to be more money. So doctors, they didn't really do a lot to get that money up front.
Right.
But there is going to be some back end accountability on that money.
So I think two things that are totally different, and something that I feel like happened through this deal is a lot of people took money in some of these programs, not realizing what the strings actually were attached to them at the time that they took it. And the legislation has been changing and changed. And it's obviously go time now where people are trying to start to file their taxes, whether they're doing it here this spring or they're going to try and file some extensions to get through to the summer or fall. What other thing are they going to have to think about when returning this money, or maybe some people, like the other thing that I think about is this EIDL loan. A lot of my offices took that. What are the implications that they're going to be facing here that are going to be different that they maybe didn't think about when taking the money?
Great question. When the PPP originally was issued back in May, it was going to be taxable. And so maybe your tax planning with your CPA throughout the summer, even into the fall, was, hey, I got this $60,000 from PPP. I'm going to owe tax on that. Well, that December 27th law changed that. So I think tax season time, make sure that you're up to speed on what is taxable, what is not. Now, we do have to report the PPP loan and the EIDL grant on the tax return. So we're nailing down to make sure those numbers get reported. They affect things in terms of basis and other nerdy tax stuff, but that's different. It's actually good, but you do not have to pay tax. The EIDL loan itself, for the person that kept it, it's like any other loan. It's just, you enter it on the balance sheet and you start paying it off, and there's interest on it, and it's perhaps it was used to just support operations, working capital over the time. Maybe it's just still sitting in a bank account somewhere, because a lot of clients might have a lot of cash right now with these programs and may not have been as busy. But I think any other grant that you've received from the state of Idaho, I know the state of Idaho did something, but you pay it back.
They did. Yep.
And so kind of a small, well, I think it was 10 or 20,000.
10 grand. Yep. For the most part.
10 grand. Other states offered just straight grants where you don't have to pay it back. State of Montana, I saw this the other day, the first time, they issued a 1099 for a $20,000 grant they gave to an orthodontist client of mine there. So the HHS money, according to their website, you should get a 1099. Government grants from states, cities, counties that gave away money that's not to be repaid back, you should be getting 1099s. All of that has to be reported as income on your tax return. The PPP money, the EIDL money, that's not reported as income.
But you can use the EIDL money, advantage, interest write-off, et cetera, that you might need for that.
You can use the idle, and the idle, as far as the idle accountability afterwards, there will be some reporting as well, like the HHS money, that you'll be submitting financial statements and, here's what I used the money for, here's why I needed it. So I think on a high level, those are the main things. From a tax planning perspective, I think the other thing was there were some clients that had more cash last year at the end of the year.
Right.
Some were about the same and some were down. It just depended on the different variations. But for those that had more cash, perhaps they went out and bought more equipment, invested that back into the practice. And so some of this money that was taxable was then spent. And so that's a planning opportunity that, it's too late now for December, but going forward this year, you could look at that as another option if you still have this cash to use it.
So how would you say your several hundred or however many dental clients you have, how would you say that now looking back financially for the years, you're prepping taxes and looking at income statements and looking at balance sheets, how would you say most of the dentists that you service fared this year going through this shutdown, and what was the end result for them?
Overall, good. It was a bounce back group that really struggled in the second quarter. Third quarter started to come back. By the fourth quarter, we had some people that were close to where they were last year in terms of, profitability. It was a great learning experience. One of the keys of being self-employed, especially as a dentist, is learning how to match your income with your expenses. So if our production and collections have gone down, we better pivot right quick and learn how to cut our costs.
Yes.
And have that. If our production and collections go up, we're going to be spending more money.
Yeah.
And so this was a real life, class this year in how to adjust on the fly. Now, a lot of it was uncomfortable, especially with staff wages, but the biggest expenses are your team members, your lab costs, your supply costs, and then your rent.
Yeah.
Well, rent, we're not going to do a whole heck of a lot about. Hopefully those lab and supply, hopefully everyone stopped ordering while they weren't producing.
Yes.
And then as far as the team members, that can be the hard one. And some of us, we can do that. We can deal with our team and it's easy to sort of adjust that schedule. Others of us, that's just kind of a constant, we don't want to deal with that.
Yeah.
It's hard.
Yeah. It's a number one stressor among most dentists is the desire to want to manage people.
Yeah.
Most of them don't like it. Most of them don't like talking about, hey, you can work, you can't work. Sally's mad or whatever at Jenny for something they said, and they just don't want to deal with it. So,
yeah.
So it is something that I had a lot of dentists actually in my group and circle say, and that shutdown and just seeing emergency patients was actually really nice. And I said, what do you mean? I mean, you were making hardly anything, but they go, at the office, I didn't have to deal with a lot of the drama. I just got to enjoy to do the work that people needed pain. I didn't have to be on my roller skates all day, and I got to still do a little bit of dentistry here and there. And it was kind of relaxing. So I was like, I guess if nothing else, the other thing that was really strange too, is through this COVID, we had a lot of change and movement in people wanting to sell their practice or decide it's time to hang it up, through the whole deal. And we saw an interesting migration too from some of these bigger cities. I can't tell you how many. We had a couple rural practices for sale, and the traction on those was fairly high through the summer and fall of this year because people were wanting to maybe pivot out of some of these higher metropolitan areas. It was pretty interesting.
Yeah. While you were talking, it made me think of another thing with staff, and that is a lot of doctors maybe saw some of the true colors of some of their team members during this time, and who was in it for the long haul. And I know everyone's situation is different, but I had that discussion a lot with the employee that was, understanding and workable, and the dentist was understanding, and then the person that was just.
Yeah. You found out who your team
Found
players
out
were.
who your team players were.
Yeah. Yeah.
Yeah.
So, Bill, we've talked a lot. Anything else we need to hit before we move off of this subject of 2020 taxes that you have to be concerned about? We've talked about the ERC. We've talked about the PPP loan. We've talked about the HHS money. We've talked about the EIDL loan. Is there anything else that we need to hit that our listeners need to hear from you about different accounting for this year, maybe specifically around those topics?
I think maybe I'll just touch on one other thing, and that is the forgiveness process. I'm getting a lot of questions and emails about that, because we're kind of at that time when people are applying for forgiveness. And I don't want to go soapbox right now, Caleb, but when they pass.
Hey, get up on that thing, Bill. You get up on that soapbox.
Don't invite me to be in a podcast, and then I go soapbox. I guess this is the place to do it, right?
Yeah.
My wife is tired of hearing me say that. So I'll call Caleb. So when the December 27th law passed, they said if your PPP loan is under $150,000, when you apply for forgiveness, you just fill out a paper, check the box, and you're done. And if you decide to apply for PPP2, a lot of people have done that. Here's the soapbox. And you use the same bank as PPP1, and you use the same 2019 payroll numbers in your application versus 20, which would be wise, and your loan is under 150,000, you don't need to submit any more paperwork to the bank, because they already have it all from the first time.
For forgiveness.
For forgiveness.
What about for application?
And for forgiveness and for a PPP2 application. So that's my soapbox point, is to your listeners that are listening to this, to talk to their CPA, maybe their bankers. The whole idea of this was to ease the burden on the dentists, the accountants, and the banks. We do not need to reinvent the wheel. If this person qualified the first time, guess what? We're doing the same thing. It's just a second hit of the same amount, same dollar amount from the first time.
That's good information.
Hopefully I said that the right way, but I've been on the phone with 3 or 4 banks, and I have, send me to your boss, send me to your boss, give me until I get to the right guy that say, this is what the law says. You don't need to reinvent all this stuff. The dentist doesn't need to go through 6 pages on your website and answer who their kindergarten teacher was to get this second round of PPP money. They've already done it the first time. It's done. So there you go.
Bill, that's actually really good, because I was just thinking of an office today. Now, and maybe I'm going to quiz you on this too, Bill, because in that they said that they had to meet, didn't they have to meet a certain amount of reduction in a quarter of
Yes.
income to get to qualify for round 2 that they didn't have to meet in round 1?
Right. So on the application, you write in there 2 numbers. This is the only research you have to do according to the 3508, which is the form, SBA form. You have to put your second quarter collections of 19 and your second quarter collections of 20. And you can get that from your dental software or a profit loss statement. Now, if you got any HHS or other taxable grant money, you have to include that.
Got you.
For 20. If there's more than a 25% gap in those 2 numbers, you got it. You're
good to go. You're good to go. Okay.
So don't waste everyone's time if that number is less than 25%, because it's not going to flow.
Yeah.
But if it's more than 25% and you're meeting those other 3 things, you qualify.
Get it done. Get it done.